Football. It is Friday the 16th, still doing the road warranty thing for one more day. And as we saw this last week, I don't know if you've noticed in the information that's come out, the Fed hiked the rates 50 basis points. So a little bit less than what they've been doing, but they're still hiking. One of the things that they did say that they don't see that it's slowing down, of course, but they don't see it's going to the extent that they want. So they continue into the hiking till they do slow down the economy further. The other thing they're talking about is their balance sheet reductions. That balance sheet reduction affects interest rates when it comes to the mortgages. So we did see some negative response to this news from the markets, but then it came back. Excuse me. So it's crawling back. So yesterday it did pretty well. Actually, it went up to the higher point of the trading range. Today it opens up not so much. It's kind of in the middle of the range. So the market's still trying to figure out where do we really sit and what happens here, where we got these great inflation readings. So everybody's thinking, oh, the Fed might taper back even further, but they're not. They're talking about charging forward into the first of the year, doing another hike. Now, the next hike they're talking about is half of what they did now. They did 50 basis points, 75 basis points before, 75 before that. The one coming forward, it's being alluded to be about 25. We're still talking about continued rate hikes. Now, why do rate hikes help? Excuse me, rate hikes help inflation? A lot of people ask me that question. Well, right now, what's inflation? Inflation is too many dollars chasing too few items. So let's go to talk about going into, let's say, an auction house, right? There's one item that everybody in there wants. And if there is a ton of people and they all want that one thing, how expensive is that one thing going to be? It's going to get extremely expensive. There's a lot of paddles that will come up and that will drive the price of that particular item through the roof until whoever wants it the most will get it, right? But what if there's only two people in there that want that thing, right? There's a chance it won't go for that much. That's what we're talking about right now in the market. There's a lot of capital out in the market, because the Fed printed 40% of the currency. Well, actually, as the U.S. Treasury printed 40% of the currency currently in circulation within an 18-month window over the last few years, and then that's gone out into the economy, and now people have more money than what they had before, and they're just buying and buying and buying and buying. And as a result of that buying, especially with supply chain issue down because of what happened with COVID and all those things, now everything's becoming extremely expensive compared to what it was before. I think I talked about this before. I was in my 20s, like 21, and I remember you can go to Taco Bell and get 2 bean burritos, 2 tacos, and a drink for $1.99. I took my daughter through the drive-thru the other day. I'm not a big fan of going through drive-thrus anymore and doing fast food. I stay away from that crap. She wanted something like, hey, it's easy, let's go. Took her through there, ordered exactly that. We get to the window, it was $14. And you can't tell me inflation ain't crazy. That's happened in my lifetime. And that amount of inflation, and it's half my lifetime. I'm 48 years old, so it's 28 years ago. There's been this swing, or 27 years, that kind of a swing. And I don't know when that swing happened because that $1.99 menu stayed around for a while. But because of what's going on with supply chain, because of all the buying that's going on, and people are still just racking up their credit card bills. I think a lot of it because of right now the lack of income coming in with some folks. We're going to see this inflation until people slow down their purchasing. Right, buy durable things, not buy the things that break and go get another one. So that's where we're sitting at right now. I'm gonna go ahead and do some chart sharing here, so we can look at see exactly how this affected the market with these, the rate hike and whatnot. So, and we also talk a little bit about the charts, so help those who don't quite understand them. So I mean, also help those who don't quite understand how these charts work, understand a little bit better. So let me show where we're at here. We've got our floor of support, if you will. You can see we've hit this particular level several times, and this is what is being drawn out of the support window or support line. And then you've got where it seems to have hit several times and stopped. This would be from my understanding, it's the Fibonacci level. So this is, you can look that one up. I'm not going to bore you with that one. This is where it's hitting and stopping that. And then we've got our trend lines, right? We've got the 14-day moving average. We've got the 21-day moving, the 35-day moving average. Got the 50-day moving average, you got the 100-day moving average, you got the 200-day moving average. What they're doing is they're taking whatever streets are over that period of time, and they're just showing the quick movements or the long, broad movements over, whether it be as short as 14 days or as long as 4 days. Now, these moving averages did act as support, which they have actually broken and actually come above it. And we have all of these acting as support below it. As you can see, we're kind of trending up with the moving averages. We're going to squeeze into this international level. See how that goes. So each of these particular lines here are referred to as Japanese candlestick, because of course originally it was in Japan to gauge what's happening in the market. Every time you see a green is the day that opened at the lower part of it, and it continued to go up during that day, and where it closed was at its high. That's why it's green. If it's red, it's at a high, close the lower point, just where it was. If you see these, what they call the wicks on the candles, that's where it traded to, but receded back, or traded to the bottom rebound. So you see the tall wick on this one, that kind of thing. So what you can see is every day, whether it moved positive or negative at quick glance. So we're looking at many days here being presented. And what's crazy is we had a lot of red, and now I have a lot of green. And it's interesting how we just still had a lot of green, but there was a lot of downward green, which was crazy going back. I mean, it was open really low to get traders to buy. They had, nobody purchasing, nobody's purchasing, prices drop until somebody starts buying, and then it starts to come up. So all it does is take sometimes somebody just to make a bid on it, and then it does become like an auction. Excuse me. So you got that auction situation going on. A lot of times it just takes one person to wave the paddle and people start to jump in. That's what we see also in the markets. So right now we're looking to, just like I'd said before, a pretty good spot, just going sideways, and we'll see if we continue to just trend sideways that way. Hopefully keeps rates pretty stable. It's been kind of in the same spot for about a week and a half, 2 weeks now. So, and it's not the same. You still have a daily movement. It's going to change your price on it. You might see an 1/8 of a percent in an interest rate movement day to day from the cost to get that rate as far as the points are concerned. But it's not the bleeding that we've had the last little while. The one thing that they talked about with the Fed talking about their tapering back more, and they're still continuing to to unload some of those things, that's going to affect this over a period of time. So we could see rates go up. I personally believe rates will climb, and we might see them recede back down. I don't know when, but that will continue to encourage people. Got to go to the 30-year fix. Got to stay with that 30-year fix. We don't know what the outcome is going to be, and just secure what you can secure for as long as you can secure it. That's all I keep telling you to do. Let's just keep moving forward with that. Appreciate you guys, and I'll talk to you on Tuesday.